Hey, welcome back to another update of my Canadian Dividend Investing Portfolio. So if you're new to the channel, what I do here is I'm just recording all of the stocks that I'm buying, mostly dividend paying stocks, all on the Toronto Stock Exchange so far. I'm using Wealthsimple Trade to buy and sell the stocks and tracking everything in this custom Google Sheet that we'll see in this video. So I'm sitting at around a stock value of $46,100. I've been at this for about the last 10 months or so, and you can see down here the monthly dividends that I have received. They're definitely increasing, they're on the way up, and because I made a big deposit, I pretty much doubled my account a few weeks ago. In the coming months, we're going to be seeing much higher monthly dividends, somewhere around $150 per month, and that'll be coming shortly as I've reached the ex-dividend dates of those recent stock purchases, and then we'll be seeing like some nice cash flow coming in. But yeah, we're basically up almost $2,300 at the moment, which means we're up about 5.1%. Now the overall portfolio yields 4.12%, and what this means, if you're not familiar, is all of the stocks that I have, almost all of the stocks that I have, pay a dividend. And a dividend is like pretty much a cash payment that company just pays you every quarter or every month or whatever, just for holding the stock. So the stock price will go up and down and do its thing, but they're just going to keep giving you money just because you're a shareholder. And on average per year, I'm getting 4.12% for my whole portfolio, and 4.12% of 46,100 is around $1,898. So that's my annual passive income from dividends. And what I do with that is I just reinvest it with the cash that I'm also depositing, because I deposit a few $100s per week, and then also I get paid some dividends, and that gets lumped in, and I just continuously have more and more money basically that's getting put into the stocks, and I'm starting to see that compounding growth effect hopefully over time. So if we want to take a quick look here at the sector chart, we can see that I am way over invested in real estate, and that's because most of the stocks that I bought in the last 2 weeks or so when I put in this large deposit, I bought real estate stocks primarily, and that's something that I'm probably not going to buy any more of or much more of in the near future, and I'm going to look to build out some of these other sectors that I have. And if we could take a quick look here at the holdings chart, we can get a quick idea of basically what my holdings are. And if you take a look at the big ones up here, this is a real estate investment trust. So is this one, and 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 so is this one. So you can see that's pretty much the big guys are making up about 50% of my portfolio. And once I kind of sort that out and get it rebalanced a little bit over time, I would like basically I would try to shoot for every position, like each company I hold, to have a roughly equal weighting. So if we look in the portfolio then, I hold 31 different stocks, I think, or different positions, and so I would be shooting for around 3.2% or something like that. Let's actually see how many I have. I can't remember. Yeah, 31 positions. So if I had an equal holding in each of them, I'd be looking at 3.23% in each position. So that's kind of my target. Of course, it's not actually happening. As we can see here, lots of them are over 10% and whatever, and lots are even below 1%. And so moving forwards, we're going to work on that. But in this video, I'm going to talk about which stocks that I'm about to buy, and I'm going to walk you through buying those stocks in the video. But before we get into that, quick pause. Because did you know that Wealthsimple Cash is giving out $25 to everyone who signs up for a new account right now? This can be for new signups or people that already have Wealthsimple profiles. So what Wealthsimple Cash is like a peer-to-peer money sharing app. It's like PayPal.me or the Venmo of Canada. It's just a simple way that you can like send money to your friends or split a restaurant bill or like buy something on Kijiji or whatever without having to do e-transfer. But the awesome thing is they're giving out $25 for you just to make a new account. The normal promotion that they do for a referral is $5. And so right now what you can do is you can sign up, you can use my code, you'll get $25 and I'll get $25. But then the cool thing that you can do is you can turn around and invite your friends. And there's currently no limit at the moment on how many friends you can invite. So if you just go invite like 10 friends or something and they sign up as well, you'll each get, you'll get $250 for that plus the $25 for me, and each of your friends will get $25, and then they can go and invite their friends, and it's just awesome. And then if all of your friends have this money splitting app with a balance in it anyways, then it might actually be useful because you can like, split restaurant bills and stuff like that. So it's really easy to get started. All you do is just drop in your email address and create a password, and it takes about 2 minutes to fill out the legal forms, and then you'll see that they credit you $25 into your account. And if you're already a Wealthsimple customer, like with Wealthsimple Trade or something like that, just click here, say I already have a login, and they're already going to have all your information. Just verify that it's correct, and you'll just basically get set up with this app. It's a mobile app, and you're going to see that you get that $25 in your account, and then a link that you can use to invite your friends and quickly just like easily get a few $100s. I've just been inviting people that I know, and I've already got a couple $100s in the last week or two. So definitely take advantage of this promotion while it's here, and let's get back to the video. So in my portfolio, I'm looking at some stocks that I can potentially add to today, and I do like to add to stocks when they are in the red for me to reduce my average price. You can see here that H&R, this is real estate, it's down a little, just a tiny bit from my average. Same with this one. Algonquin Power is down quite a bit. Northland Power and Cineplex, this is a super dodgy one, and then DCM, this is one that I just recently added as well. But I'm actually not going to add to any of these today because what I was doing earlier, I was looking at the spark lines of some of these companies that are in my portfolio, and this is actually one, it's already on the screen, Savaria. This is one that I want to add. Savaria is like a pretty solid monthly dividend paying stock, decent growth, and these guys are involved in like the manufacturing and sale of mobility hardware equipment like wheelchair lifts and stuff like that, for helping like disabled people get like stair lifts and elevators and things like that. And they have they've been on a pretty good growth here. We can actually sort here for the maximum, and you can see they've really taken off in the last couple of years here. And I'm not sure if this will continue growing, but they are a monthly dividend stock, and they constantly increase their monthly dividend payment, or their annual dividend payments. And so this is one that I like to just drop in one stock at a time and sort of average in over time. And if they drop down a lot more in the future, I'll consider adding more. But for now, just one here and one there is good enough for me. Another one that I was looking at, let's pull up the list here, was Fortis. Fortis is basically a big utility company here in Canada. They've got a solid dividend of 3.63% and just a very nice projection here of growth over time and dividend growth and growth in their stock price. And they have a little dip here. If we can actually zoom in a little bit in like in the last year, we've just dropped down here a bit, and I'm going to jump in on that while I can. And if it continues to drop, I'll probably add more because they have just a very solid history. Another utility company that I was looking at here that's already in my portfolio is Emera. And Emera also is having a little bit of a dip in the last couple of weeks here that I want to jump in on. They're just a big utility company. They make up a small portion of my portfolio, so I would like to definitely grow that to sort of start building that balance out in some of these smaller positions that I have. And they've got a nice yield of 4.5%. There is another utility company that I was looking to probably just add one share today as well, and that is Hydro One. These guys make up a very small percentage of my portfolio at 0.7%, but also they've got a nice yield, and they're also experiencing a dip in the last couple of weeks. And so again, I was just kind of been waiting to buy that, and if we get a better look, we can maybe just look at like the max or something, and we can see here that they are, in the last couple of years, definitely doing pretty okay. And then there's two other shares that I was looking at adding today. One would be BNS. This is the Bank of Nova Scotia. And they're just like all Canadian banks. They're doing pretty well. And if, again, we look here in the last year or so, they're actually up quite a lot. Maybe let's zoom out to the last 5 years. They haven't like blown out like crazy like some of the other Canadian banks yet, or whether they do or not, but they've got a nice dividend yield. Also probably going to be growing their dividend payments at some point in the future. And they're making up only 0.9% of my portfolio, so I thought now is a good time to drop in another share. And there's one last one that I was looking at adding to here. It is MFC. And they're also experiencing a pretty big dip here. Whether it's just going to be a long downwards run or just a dip, either way, I think I'm just going to drop in another share today. They only make up like 1.5% of my portfolio, so just a share here and a share there just sort of starts chipping away at that. And anytime that these companies are down, I try to just drop something in. Whether or not they're below my average price or just on the decline, it doesn't really matter to me. So let's jump into Wealthsimple Trade, which is the broker that I use to buy and sell these stocks. And let's go into the tax-free savings account where all of my stocks are and make some purchases. So we can actually just quickly scan through here just to get a quick idea. It has slightly different information than the Google Sheet, but basically we're down 1%, $500 in the last day. Ouch. This fluctuates all the time, and it's not something to get worried about because tomorrow it'll probably be up $500, and you just don't have to worry about that stuff. Over time, it generally grows, and you'll see that here because in the last week, we're up $81, and in the last month, up 87, almost no change, and in the last 3 months, you can see we're up $615 for 1%. In the last year, we're up $2,200, 5%, and basically all time it's the same because I've been doing this for less than a year. And so you can kind of see that for me, my account is generally growing. So if I just see something like this, like down $500 in a day, don't freak out and sell everything. Just hold, hodl, full throttle, you know what they say, and you should be okay. If you're buying solid, like, stable companies with, like, dividend growth and all that stuff. So let's get started. Let's take a look here at Fortis first. So Fortis on the Toronto Stock Exchange. If you're interested in them, here's some of their market details and about them. You can pause there if you want, but otherwise I just want to pick up one share of them. It's going to be around that price, $54, so that's cool. Let's buy one of those guys. And once that's done, the next one that we can go in and pick up, let's just do the other utility companies. So let's EMA. This is Emera, again on the Toronto Stock Exchange. Again, if you're interested in some of their market details and about them, you can just pause here and get a quick view. But basically, I just want to pick up one of them for about $56. We're going to place that order. Cool. And then the next one, let's take Hydro 1. I think you have to type in this whole one because you need more than one letter. Hydro 1, there we go. Again, get some of their market details and about them here, and I just want to pick up one of them. That's just going to be for about $30. All right, and then let's take Bank of Nova Scotia. So that's going to be BNS. And they're trading pretty flat today, which is fine. Again, market details and about them is down here. Again, I'm just going to pick up one of each share today. So it's going to be about $81. So we'll buy that. Done. And then what was next? We had MFC from Manulife Financial. A little bit of a decline today, which is great if I'm buying today. So again, we'll just take one, and you can kind of see the market details here. If you're interested, a lot of this matches exactly what I had in the Sparklines tab on the Google Sheet as well. But it's nice to see kind of some sentences here about them, I guess. So we'll just buy that for about $24. And hit done. And then the last one that I want to pick up today is Savaria, SIS. And a little bit on the upward. Should have bought them earlier today, but that's fine. It's just a difference in a couple cents. But when we look here at the market details and about Savaria, you can check that out. But let's just drop in one. That should be enough. Yep, I think so. Place that order, and we're done. So let's jump back into the Google Sheet now and go log all of these transactions. So what I do is I come to the transactions page and I scroll all the way down to the bottom. And once I'm here, I just check with the notifications that I get from Wealthsimple Trade. And I just make sure that I drop in the actual price that I paid, because when you use a market buy, sometimes the actual price differs a little bit from what you saw when you're making the purchase. And once all that's in, the last thing to do is just go back to the summary page and just kind of check out what has been updated. So we spent some of the cash that was in there. The remaining cash is basically like being held because I just deposited it a few days ago, so we'll spend that in the next video. But the thing that I'm mostly looking at down here is the dividend annual income. So at the beginning of the video, it was 1,898, and now we're looking at about 1,909. So that's an increase of about $11 per year of passive income, tax-free, and that's great for me. This is increasing slowly by about $11 or $12 or $13 every time I make a deposit and buy and sell around $200 or $300. And yeah, that's just going to keep on growing, and I'm going to, like I said at the beginning, I'm going to use that to reinvest and really get that dividend snowball effect. So anyways, guys, I think that wraps up this video. Thanks a lot for watching. If you like the video, make sure you leave a comment down below. Just let me know what you think. And before you go, also definitely check out Wealthsimple Cash. It's an awesome promotion that you can get right now. Definitely, it's easy to get a few $100s for doing almost nothing. And so I definitely recommend, just checking it out, installing the mobile app, getting your $25 at least, and then probably getting a few hundred more, because it's the easiest money going around. And then what you can do is you can use that to invest and turn it into even more money. So guys, thanks a lot for watching, and I will catch you in the next one.